Well, it was a colossal and monumental moment for all the Indians. Lord Ram's homecoming has filled the nation with unparalleled emotion. Hello and good morning. You're watching Market Cafe with me, Snehisha, and with me is Shreyansi Singh. Now, echoes of Ram can be heard from Kashmir to Kanyakumari, and a short while ago, childlike idol of Lord Ram was consecrated by the Prime Minister Narendra Modi yesterday. Now, the RSS Chief Mohan Bhagwat, Uttar Pradesh Governor Anandiben Patel and Chief Minister Yogi Adityanath were also present inside the sanctorum during the rituals. The 51-inch tall Ram Lalla idol has come to life. It has been adorned with gold and flowers, and it was carved out of black stone by Mysuru-based artist Arun Yogiraj and had been covered with a veil until yesterday's ceremony. Now, with this Pran Pratishtha ceremony, now that has culminated, and addressing the nation on the occasion, the Prime Minister declared that the Ram Lalla will no longer stay in a tent. He further went on to say that 22nd of January is not merely a date but marks the advent of a new era.
मैं अभी गर्भगृह में ईश्वरीय चेतना का साक्षी बनकर आपके सामने उपस्थित हुआ हूं। कितना कुछ कहने को है, लेकिन कंठ अवरुद्ध है। मेरा शरीर अभी भी स्पंदित है, चित्त अभी भी उस पल में लीन है। हमारे रामलला अब टेंट में नहीं रहेंगे। हमारे रामलला अब इस दिव्य मंदिर में रहेंगे।
Well, the dawn of a new era is the word coming in, but when you look at the Dow as well, it looks like it's the dawn of a new era, Snehi, for the Dow as well. Because we're seeing the US stock futures were flat, but then when you look at the moves coming in from the Dow in yesterday's trade, that surpassed 38,000 for the first time ever. Monday was a notable trading session for the major averages, while you did have the Dow advancing more than 100 points to hit a new record and close above 38,000 for the first time. You also had the S&P 500 that rose 0.2%, also hitting a new all-time high. Now, the Nasdaq Composite gained 0.3%. Those moves add to the S&P 500's advance after the broad market index officially reached bull market territory on Friday, topping both its previous intraday as well as closing all-time highs from January 2022. But investors at the same time are deliberating how long the gains can persist, especially as the rally this year has centered around tech stocks like the likes of Nvidia. And this is while broader participation has continued to largely disappoint. Now, this month alone, Nvidia is up 20%. In contrast, the small cap Russell 2000 is lower by 2%. But in terms of gainers, yesterday you did have United Airlines that rose more than 6% after reporting strong fourth quarter results. And shares of other airline operators also rose in tandem, so the likes of American Airlines, Southwest Airlines, Alaska Air Group, as well as Delta Airlines. You did see all of them gaining in trade yesterday. Now, US Treasury yields pulled back and was down about around 4 basis points, around that 4.1% level. Last week, it rose to levels last seen in December, and this is largely the handover coming in from the US markets.
Well, absolutely interesting moves coming in on the Dow. What's key to note is Dow has closed at 38,001. So, just above that 38,000 threshold. But let's talk about what's happening in the world of crude as well. And oil prices rose on Monday after Ukraine reportedly attacked a major Russia fuel terminal over the weekend, raising renewed concerns about supply disruptions. Now, Ukrainian drones struck a major terminal near St. Petersburg, and that facility on the Baltic Sea exports 1.35 million barrels per day of crude oil, fuel and refined products. So, it's a pretty significant terminal that they hit, and if they continue to try to target target Russian oil infrastructure, that would be a game changer, and that's what the market is pricing in here when it comes to these crude prices. Now, Libya's National Oil Corporation, meanwhile, resumed full production at the Sharara oil field on Sunday after protests shut output for the last 2 weeks. So that's also another significant development that's come in the world of oil. Now, remember, Sharara is one of Libya's largest oil fields with the capacity to pump 300,000 barrels per day. So big numbers coming from there. And traders have generally been more focused on the supply and demand outlook rather than the geopolitical risk. But the International Energy Agency has a bearish forecast for 2024, projecting that production outside of the OPEC, particularly in the US, will rise by about 1.5 million barrels per day, more than covering the global demand growth of 1.2 million per day. So that's indicating a sufficient supply to meet the global demand. OPEC, on the other hand, has presented a stronger outlook, with oil demand forecast to grow by 2.2 million barrels per day, while production outside OPEC will grow by 1.3 million barrels per day. So, well, when supply, overtakes demand, prices will see some amount of subdueness, and that's what happened with oil. Went up 2% in the day, but managed to settle a little bit lower. Brent just shy of that $80 per barrel mark, and WTI at $75 per barrel as we speak.
Absolutely. And shifting focus to the top stories that we're tracking this morning, starting off with the yellow metal then. UBS expects gold to close 2024 10% above its current levels, largely led by potential rate cuts. Starting May, if the Federal Reserve slashes rates by 100 basis points, UBS analysts expect the move could spark fresh demand, especially from exchange-traded gold funds.
Well, moving on then, in a major move, China's state-owned banks have reportedly taken up measures to support the yuan, tightening liquidity in the offshore foreign exchange market while actively selling US dollars onshore as equity slid. The mainland index CSI 500 plunged 4.7% to its lowest level in more than 4 years. Investors are growing increasingly jittery about the state of the economy.
And staying with China then, amid the worsening stock rout, capital city Beijing has set a growth target of around 5% for this year. While it has surpassed last year's target of 4.5%, the economy of the capital city expanded 5.2% in 2023, which has so far posted feeble post-pandemic growth amid a deepening property crisis, mounting local government debt, and persistent deflationary risks.
Alright, with that, it's time to slip into a very short break on this edition of Market Cafe. You stay right tuned, we'll be right back. Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. This is ET Now. Let's take stock of how the Asian markets are doing, and well, Japan is the one in focus as we speak, because the Bank of Japan, on the base of that action, the Nikkei index opened higher today morning as investors awaited the outcome of Bank of Japan's first monetary meeting policy for the year, and well, they have kept their stance unchanged. The Nikkei rose by 0.6% to hit a fresh 33-year peak right there as we speak as well. 0.5% uptick coming for Nikkei. Remember, Nikkei has had a very good run in the month that has begun in the year. So well, Nikkei continues to maintain its stellar run, and the Nikkei will hit an all-time high if it breaches 38,915.8, which it hit on the 29th of December all the way back in 1989. Very close to those levels as we speak. So well, let's see what happens to Nikkei. Let's shift focus and talk about Australia. And ASX 200 is on the pace for a third straight day of gains, rising almost 0.5%, 0.5% on open. Right there as we speak, also uptick of 0.4% coming as we speak. Shifting focus, let's talk about South Korea's Kospi as well. That added 0.3% on open. Right there as we speak at 24.69. That's where Kospi is at. And shifting focus to Hang Seng. Now, Hang Seng was pointing to a rebound after the index tumbled almost 2.3% on Monday and hit its lowest level since the 31st of October 2022. So Hang Seng also uptick of 0.6% coming in. Healthy moves over there. Let's see if that can sustain that. And lastly, let's talk about Shanghai. Shanghai, the only index in the red, almost a 1% downtick coming in on Shanghai. And let's shift focus back home then and talk about Friday's move, because the market was shut yesterday. Market is also going to be closed on Friday, so quite the truncated week coming for us. And Nifty on Friday closed at 21,571, implied open at 21,744, indicating a rather solid start for us this morning. 0.5% uptick on the Nifty, that's implied. So well, Shreyansi, let's see how that pans out for us.
Absolutely. Let's see how that pans out for us. We also...
Hi there, welcome back and thanks so much for staying tuned to ET Now. This is Market Cafe. Now let's talk about crude, because crude prices have risen and retraced that $80 per barrel mark over renewed supply concerns. Now reports are also suggesting that Ukraine attacked a major Russia fuel terminal like we spoke about earlier in the show. So what will be its impact on OMCs like MRPL, Chennai Petro, given that it has been a rather muted Q3 for these companies? My colleague Somit is joining in with all of those details. Somit, good morning, take it away.
Well, the headline oil marketing companies like Internal Corporation, BPCL and HPCL would remain in focus. Now, this is not only because of the fact that crude has gone back to around $80 per barrel level, and this could be because of the suspected Ukraine drone attack on Russian fuel terminal, but also because of the fact that Chennai Petro and MRPL have reported a weak set of numbers in the third quarter of FY24. Now, Chennai Petro and MRPL are refining heavy companies, while the other oil marketing companies like Internal Corporation, BPCL and HPCL are a mix of both refining and marketing, but given the fact that these two companies have reported weak numbers, this could at least conclude that the refining segment of these three oil companies could be weaker in the third quarter. Now for Chennai Petro, if you see, their EBITDA and net profit declined by around 61% and 67% owing sequentially, and this was owing to weaker core gross refining margin. Now if you see the GRMs that came in at around $6.2 per barrel as against $12.1 per barrel reported by the company in the previous quarter. Now the gross refining margins were also weaker than analyst estimates, and this could be because of the narrowing Russian crude discount. Also sequentially for Chennai Petro, the debt increased to around 4,800 crore rupees. Now the debt increase was of around 1,400 crore rupees for Chennai Petro. When it comes to MRPL, their EBITDA and net profit also declined by around 46% and 63% sequentially. GRMs came in weaker at around $5 per barrel as against $17 per barrel reported by the company in the previous quarter. GRMs again were weaker than what the street was estimating because of narrowing crude discount, and there was a windfall impact also because of additional excise duty. There was a hit of around 190 crore rupees on the EBITDA, and because of refinery transfer provisioning, there was a hit of around 253 crore rupees on the EBITDA. So keep an eye out for oil marketing companies. The Q3 could be weaker than expected for all the three oil marketing companies.
Absolutely. Thanks, Amit. So we'll keep an eye on those counters, but let's shift focus to some corporate news then. Sony has called off its $10 billion merger plan with Zee 2 years after the merger of two of the biggest media companies was announced. In a statement, Sony said that it was extremely disappointed that the conditions to the merger were not met. Ankur Mishra as well as Anurag Joshi filed this report with all of those details. Ankur, to you first, what led to the fallout of this mega media merger?
Yes, Sony has finally decided that they want to terminate the deal with Zee. Remember, a bone of contention was there who will be the CEO of the merged entity, and the discussion on this matter was on for a long time. In fact, when 2 years completed on December 21, both the parties engaged in talks in good faith to extend the deadline of the merger. However, now Sony has officially said that it has gone ahead for terminating the deal. It has cited that the key merger conditions have not been met. Remember, Sony was saying that Puneet Goenka should not be CEO of the merged entity because there is a pending investigation against him. SEBI had passed an interim order against Puneet Goenka as well as Subhash Goenka. However, SAT had given a go-ahead for him being CEO of the merged entity. But the argument of Sony was that since a pending investigation is there, the company should not suffer for the same. Therefore, NP Singh should be the CEO of the merged entity. But all in all, there was not an agreement between two parties, and in fact, finally, it has now been decided that the deal will be called off.
All right, Ankur, thanks for all of those details. Anurag, let me come to you now and tell us about Zee's statement on Sony's bailout, because Puneet Goenka put out a tweet after the fallout that this is a sign coming in from Lord Ram. So what are you picking up on this, and what is the next course of action that Zee is planning?
Japanese entertainment conglomerate Sony Group has called off plans for a proposed merger with Z Entertainment Enterprises more than 2 years after both sides unveiled the plan. The deal was first announced in December 2021 and both sides had a 2-year deadline to conclude the transaction. Following the expiry of this deadline last month, both Sony and Z had entered into good faith discussions to try to find this resolution and salvage the deal. And a key element of these talks had been to seek an extension to the merger talks so that the amalgamation could be concluded. However, either side could provide the other with a termination notice and could end the agreement. Following a board meeting today, Z acknowledged the termination of the merger agreement by Sony. The entertainment giant said that Sony entities Culver Max and BEPL had served the company with a 90 million termination notice, and these are for alleged breaches that Sony has claimed that took place by Z on terms of the deal. Sony has also invoked arbitration process following the failure of the merger talks. And a key revelation that Z has made is that its MD and CEO Puneet Goenka was ready to step down in the interest of the merger. However, despite the talks taking place for almost a month, no favorable outcome in favor of a merger could be achieved.
Well, thanks, Anurag. Moving away from that mega media merger then, on the occasion of the consecration of the Ram temple in Ayodhya, PM Modi has announced a new scheme for rooftop solar projects. Now, the scheme has been named as PM Suryodaya Yojana. Prakash is here with all of those key details. Prakash?
Yes, a very significant development coming in as the Prime Minister has announced a new scheme for rooftop solar projects in the country. A new scheme called PM Suryodaya Yojana has been announced by the Prime Minister on the auspicious occasion of consecration of Ram temple. A very positive development coming in as 1 crore households will get rooftop solar projects under PM Suryodaya Yojana. While making an announcement, Prime Minister has said that this scheme will not only bring down the electricity bill of the consumer, it will also make India self-reliant in the field of energy. However, there is a national rooftop solar scheme which is already underway, where government provides 40% capital subsidy on installation of rooftop solar projects with capacity up to 3 kilowatt. This scheme was already extended by the government till March 2026, but there is a possibility that the government will merge existing scheme with the PM Suryodaya Yojana with additional benefits. Along with that, there is a separate proposal before the government to increase capital subsidy under existing scheme on projects, on rooftop solar projects, especially with higher capacity. However, there is a possibility that the government will enhance allocation of funds for rooftop solar projects in the interim budget.
Well, and some market news then, India has overtaken Hong Kong as the world's 4th largest stock market. South Asian nation remains an investor darling in the new year because China's economic struggles have stymied the growth in Hong Kong. So, well, India has overtaken Hong Kong for the first time in another feat for the Indian markets. Now, the combined value of shares listed on Indian exchanges reached $4.33 trillion as of the last close versus $4.29 trillion for Hong Kong's last close, according to data compiled by Bloomberg. Now, that makes India the 4th biggest equity market globally. Its stock market capitalization has also crossed $4 trillion for the first time on the 5th of December, with about half of that coming in the past 4 years. So, well, that's a remarkable feat coming in for the Indian stock market, overtaking Hong Kong for the first time.
Absolutely remarkable feat indeed. But with this, we're timed out on this segment. We'll see you with more stock-specific news on the other side.
Hi there, welcome back and thanks so much for staying tuned. Let's shift focus and talk about some banking earnings for the Q3, and ICICI Bank's Q3 performance has been impressive with a notable beat in estimates, and Kotak Mahindra Bank's Q3 results have revealed a year-on-year net profit growth of 8%. My colleague Gaurav is joining us with more details on both of these banks and their Q3 numbers. Gaurav, take it away.
Yes, so let's talk about ICICI Bank, and if you look at the numbers were actually in line or rather above what the street was expecting. Net interest income was about almost by 13.5%. PAT was up almost by 23.5%, and it was actually a beat on the street's expectation because they reported lower provisions this quarter. If we talk about advances and deposits growth, that was also healthy at 18.5% this quarter. And let's also talk about net interest margin, which declined almost by 10 bips to 4.43%, but it was also in line with what the management had guided earlier. And more importantly, management has also said that we may see some kind of decline in the NIMs in the coming quarters as well, but the decline in the NIMs will be somewhere in the single digit number if we talk about the bips terms. And going ahead, management also said that they do not see any kind of risk coming up in the slippages and the credit cost, and that is actually a positive sign from the management. And from here on, we have seen the PPOP growth, which was fallen to 10.9% this quarter, but management has said that from here on they are going to decrease the speed of adding headcount. That will aid the growth in PPOP, and this will also aid some kind of support to net interest margins. And on back of this, we also have Jefferies and CLSA maintaining its buy rating with the target price of 1250 rupees and 1300 rupees respectively. Let's also talk about Kotak Mahindra Bank, where net interest margins, PPOP, PAT, everything was the growth was in line with what the street was expecting. NIMs actually surprised by the bank. NIMs were stable, whereas street was expecting the NIMs to decline for the bank, and NIMs were stable at 5.22%. And ROA also improved to 2.6% versus what it was to 2.4% in the last quarter. If we talk about advances growth, it was healthy at 15.7%, and deposits also grew almost by 18% on a YOY basis. And lastly, CASA was also healthy at 47.7% for the bank, which is actually high if we compare it with their other peers. Lastly, we have some commentary coming up from the management, and where they said that when the rate cut happens, they have 57% of their book which is linked to EBLR, and we may see some kind of pressure then, but it is still far from the today's date. And I mean, the rate cuts are expected somewhere in the second half of FY25, and that is why on back of this, Jefferies has maintained hold rating and the target price of 250 rupees because they believe that valuation for the Kotak is a little higher on the side. And Citi has also maintained neutral and a target price of 2040 rupees for Kotak Mahindra Bank.
Absolutely. Thanks, Gaurav, for that update. Let's also listen into what the management at Kotak Mahindra Bank as well as ICICI Bank had to say.
If you look at the growth of unsecured, we have talked about the fact that we are quite comfortable to grow this. If you notice, we had come down on the unsecured retail during the COVID period, and thereafter we've been steadily increasing. We are currently at 11.6% of the overall advances, the net advances. They've said that we will be okay to take it to early to mid-teens, and we are on that trajectory. At this stage, there is no intent of kind of trying to put a brake on that.
So our focus has been really as to how do we grow our overall deposits. And our CASA ratio, what you talked about, is still amongst the highest in the industry. The system liquidity is extremely tight. And if you look at where the market rates overnight are trading, are actually above the repo rate. So as far as we are concerned, we are very clear. Our focus on granular deposits through active money, through term deposits, through CA and SA. So we have three different strategies on the savings. If you look at the stress, it's still stable, manageable, and we continue to grow the business in line with our strategy.
Rural business is cyclical, and there are peaks in the December quarter and in the December quarter. So if the increase is primarily in account of seasonal NPA additions in the Kisan Credit Card portfolio and some amount of normalization of NPAs on the retail side, overall, I think if you will see the overall NPA provision numbers, they are very comfortable. No, the capital adequacy is, there's a marginal dip, which is not the numbers that you talked about. We have a capital adequacy of 16.03%, and that includes profits for the 9M against the 16.7%. As you are aware, RBI, changed the norms relating to certain segments of our assets, and this sort of largely reflects that.
All right, let's move on. And Gaurav, let me come back to you because we did speak about Kotak as well as ICICI, but let's also talk about Axis Bank because that will be in focus today. It's set to report its Q3 earnings today. So what is the street expecting from these results, and break down what the expectations are, Gaurav?
Yeah. So if we talk about Axis Bank, Street is actually a little bullish about Axis Bank, and they believe that the bank is going to outperform the Street's expectation at least in this quarter. If we talk about the operational data, they're expecting net interest income to improve almost by 8% this quarter, and the PAT is expected to increase marginally by 1.2% in this quarter on a YOY basis. Now the bank acquired Citibank's customer base, Indian customer business in April, and that is why YY comparison will be a little difficult for the bank. And if we also talk about the QOQ comparison, that is also going to remain healthy according to the Street. We may see some kind of high cost to income ratio which will bring down the PPOP, and that is why the Street is expecting 4.4% decline in the PPOP this quarter on a YOY basis. NIMs are also likely to moderate, and they are going to Street is expecting some kind of 10 bips of decline in the NIMs, and this may come somewhere in the range of 4%. PAT growth is going to get aided by the credit cost, lower credit cost. That means the asset qualities is remain to be healthy for the bank, at least what the Street is expecting. And going on, we will have to look at what management has to say about the NIMs trajectory and the mix of their deposits, because this will determine the cost of funds for the bank. They will also have to look at the deposit growth, because they have CD ratio of 94%, which is actually a little on a higher side. Let's also look at some commentary coming up on the city's integration and how management is looking at the growth perspective now that the city is now fully integrated in the bank. And lastly, let's also look for any commentary coming up on the cost to income ratio, because that is a little elevated for the bank, and if that comes down, we may see some kind of outperformance coming up from Axis Bank in this quarter.
Absolutely. So we'll definitely be keeping an eye on Axis Bank. But which are the other counters that we're keeping an eye on? Ansh is joining in with that snapshot.
Right, so Colgate India will be the first stock in focus for today's trading session, as they have reported revenue from operation which is up by 8% to 1,396 crore, whereas the EBITDA has seen an uptick of 29% to 468 crore. Also, the PAT has seen a jump of 36% to 330 crore. Apart from this, Coforge has also reported their numbers, and their revenue is up by slightly 2% to 2,323 crore, whereas the EBITDA margin has improved from 11.6% to 13.5% on quarter-on-quarter basis. Also, the total order book executable over next 12 months is up by around 16%. Whereas if we talk about Karur Vyas, their net interest income is up by 13% to 1,001 crore, whereas their PAT has jumped by 43% to 411 crore. Also, the GNPA has reduced from 1.7% to 1.58%, and NNPA has also reduced slightly from 0.47% to 0.42%. If we talk about MRPL, then the revenue they have reported is down by 8%, but EBITDA margin has seen a drastic improvement from 0.9% to 4.1%. Also, they have converted the loss of 194 crore to 392 crore of profit this quarter. Lastly, let's talk about Chennai Petroleum as well. And the revenue from operation here, we are seeing an uptick of 6.4% to 20,453 crore, whereas the PAT is up from 144 crore to 365 crore now.
All right, Ansh, thanks so much for taking us through that. We will be keeping our eye out on all of these stocks. And with that, also take us through what the FNO setup looks like. Where should we be keeping our eye out on?
Right, so let's start with the Nifty first. Let's get the chart on the screen as well. If you see the chart, Nifty seems to have formed a bearish engulfing candlestick pattern, which is usually a very bearish sign. Also, it seems to be taking resistance at 20 DMA, which is around 21,670 level. Also, it took a strong resistance at around 21,700. So, 21,670 to 21,700, this 30-point range seems to be a strong selling pressure area as well. So, this could be the resistance, and on downside, we are seeing good support at 21,500. So, initially, Nifty had got stuck between 21,500 to 21,800. So, it seems like it has got back into the consolidation phase. If we break 21,500, then we can see 21,350 on downside. Also, on option front, also we are seeing the same resistance at 21,700, where we are seeing a very active call writing happening. Let's have a quick view on Nifty Bank as well. So if you see the chart, Nifty Bank was on a positive side. It seems to be taking strong support at 45,500 level. Initially also it has given a good bounce from the very same level. Also we are seeing 100 DMA around that level, only 45,350 to 45,400. So this 45,350 to 45,500 could be a strong support if we see any down move from here. Also on option front, we are seeing a strong put writing at 46,000 level, which could be some resistance on upside. Also, if we see FI action, then they have actually reduced the index future position by 22,000 contracts, and we are seeing the long slipping to 45.9%, which is a 1 month low level.
Absolutely. So thank you so much for that snapshot, Ansh. We'll definitely be keeping an eye on how that pans out for us. But with this, it's a goodbye from me, Shreyanti Singh, as well as my co-anchor Snehi Shah and the entire team that put this show together. Thank you so much for watching. And the market takes the action forward, so stay tuned.